Eric Mwather with Mwather.com. This is going to be part 3 of that taser video series, and it just came off the top of my head here. I was just going through the day here looking at charts, and I noticed that there is a nice teachable moment, in my opinion. We can see we're having a down day, and it's affecting how prices are moving for individual stock names. The stock that I mentioned over the weekend was RDNT, and we were talking about the fact that it looked like it was showing signs of moving to the prior monthly closing high and breaking out. So somewhere around here, you can see that this is a prior monthly closing high. The price there is 9.30. So anybody who's been watching this stock, wanting to see whether they can own the stock for trade, given the fact the stock has come from trading at 150 beginning of 2014 all the way to about $10 last year. That's a huge gain. That's almost close to 900-800% gain. And so if you're timing this, you can say, okay, now that it's moving above 69.10, which is now always sets the stock up for potential to move higher, and it's only a potential. So you can set an alert. It triggered the alert today. The high for the day is 9.36. So right now it is almost in no man's land. It needs to be above 9.30 if it's gonna do well. And we can see that on the monthly, the MACD is looking great. At least one of the MACDs is pointing and trading at new highs. So the minimum requirement there has been met. No big deal. If we go to the weekly, we can see that you are talking about levels where you can use to go into a stock. So instead of waiting for this breakout above on the weekly above 930, if this is a stock you really liked for whatever reason, you could have seen that this was the perfect entry here on hindsight. This RSI movement began the momentum move at about $2. You draw a simple straight line. You can see the stock is so powerful, it doesn't even come back to that line. It seems to be holding above the 50 during this pullback. So there's your entry possibility. And recently, it settled just above 50 on the weekly time frame. So there's your entry point possibility. So instead of waiting for the 930 level, this is logically on hindsight where one would have gone long. Now we haven't adjusted anything in terms of our understanding of the RSI. We're just finding a level where a stock held and a critical level on the stock, using it for possibility of finding us bounce territories down the road. So we know that's the principle and would have served us well here. My point is, yes, once you identify a stock you love or you think you want to own, you can always narrow down on the entry. Now on this weekly time frame, we can also see that I want to just quickly touch on something here. Uniform activity below zero, back above zero on this MACD time frame. And it can be on any MACD setting, but on this one it's the shorter time frame. As you can see, we have the short one and the long MACD setting. Now what I'm getting at here is whenever you see uniform activity below zero and back above zero on a MACD, that tends to tell you that the move is going to reverse. And I'll show you. So this is here in August of 2014. And again, we see similar type situation where we have what looks like a U-type formation below zero and back above it, another entry level. So if I show you the price, we can see that those 2 points correspond with this entry in price and RSI, and this entry in RSI and price. So the market was giving you multiple reasons to own the stock. The point is, you don't have to be tied down to only one strategy, which is to wait for the breakout. Let's take a look at the daily. On the daily here, we can see that the stock is doing its best to break out on the RSI above what could be called a wedge. So if the stock is going to do well, of course we don't know the future. In the future, coming weeks and days and months, the stock could be trading here or here or here. Who knows? But now that the stock is trading above 930 and trading above this wedge, the possibility has now increased that it can trade in the 11s, the 12s, and the 13s. The door is open because it's moving above that threshold. Possibilities that it could eventually move to these higher levels. Now, the fact that it has come to our buy point at about 930 and seems to be stalling is a problem. It needs to be above 930 for this to be a true breakout. But it hit that level and has come back down. So now you start, if you're looking to buy this, you ask yourself a couple of questions. Is this going to work or not? We don't know. But if I take a look at the hourly, I can see that if it's going to fail, it's going to fail now, because it looks like every time the RSI fails at this level, there is a pullback on a short-term basis, even here. Well, I guess that gave us a high there, somewhere there, slight pullback, and again we came close here and stalled, which is this high. So you don't want to be part of, nobody wants to be part of a move lower. We always want to buy a stock, in theory, when it's only moving higher. We want to be the luckiest people in the world. Nothing wrong with that. It's our intention. So I don't know that it's going to hold or whether this is going to become another resistance level. It's a problem for the stock. But since you are playing this on the monthly, mainly, the main proposition here is on the monthly, then you have to go with the monthly chart. And you're looking at this thinking, okay, the daily, the weekly, they cannot be perfect, but I'm playing this from the monthly point of view. A couple of things. I can insist that I only buy the stock once it shows potential of breaking out above 930. So if you want to buy this, wait for the next move above 930, not knowing whether it's going to be successful or not, and set a stop. Your stop can be anywhere from 3% to 5%, or maybe even a maximum of 8%. Pick one of them. And you go in when the stock is trading at 933, the highs for the day is 936. You can say, you know what, I'm not going to touch this stock until I see the stock print a new high for the day, which is moving above 936, so which would be 937. 937. I'm only going to buy this stock if I see proof positive that it can move above and trade above resistance. So that's another way. Again, there's no hard science. You just sit down in a calm and relaxed environment, make a decision of what you want to do. So many things to do here, or many options. This is what I would do personally. Okay, I say you try to move above 930 and seems to be failing. I can see logically this could be a problem. You're showing resistance where you've been pulling back, so maybe this is a trap. I don't want to be part of a trap. You know what I'm going to do? I'm going to insist that you prove something to me. Not knowing whether I'm going to be right or wrong, I would like you to make a new high for the day. So until I see 937 printed on the charts, I'm not going to buy the stock. So at 937, 938, 940, I might take a position, because that would also suggest that you've moved above that blue line, which increases the odds for success. Now, there's one thing I need to point out here, and this is the 10-minute chart that actually inspired me to make this video. You know that uniformity principle we talk about on a minute time frame? The stock has moved from 875 all the way to 935. That's a big move in one day. This is today's move, coming off yesterday's low here. Today's move, and we've been trading for about 2 hours, 3 hours. This movement began here on the RSI, and you know the drill. So when the stock had come back here, it inspired me to make this video, because I knew that if I draw a simple straight line, the time to have bought the stock on a pullback was here, on a minute-to-minute time frame. And what I'm getting at here is very simple. Even when you buy a stock on a day-to-day move, when you're buying a stock, just before you buy the stock, minutes before you buy it, on the hour you're buying a stock, I would encourage you to keep a little bit of perspective on what the hourly is doing and the minute chart is doing, because you want to be part of a pullback. You don't want to buy the stock at the day highs. You'd like to give yourself an opportunity to own the stock, and then there's an increased odds for movement higher. In this example, again, you use the same principle of finding out where a move began. So you want to buy the stock today. You don't know that you should buy it here, 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 or here, or here, or here. You don't know where. You're kind of not sure. I'll show you a simple method, and it's the same method we use on finding potential entry levels. You take a simple straight line where the move began on the RSI, which is here, and when the RSI comes back to that level, and more so, oh boy, I cannot stress this enough. Oh boy, if you see uniform activity, which is exactly what we got there, you go long here at about 9:10, 9:15, somewhere here, and let it be. So now you're in the stock at about 9:15 based on uniformity principle. Well, it's not time. So 9:15 approximate. You went long somewhere around here when the RSI showed uniform activity bounce. And you let the stock do whatever. You'd love the stock to go and break out above 930, which is the monthly buy point. Now that you're in the stock, your intention and your expectation is that the stock proved itself by moving above 930 and going on to trade in the double digits, 10, 12, 13, 14, heck, 1,000, don't care. The higher the better, right? That's the objective. And so you've used the intraday action to find yourself a piece of a short-term entry in a stock. Okay? Just keep that in mind. We don't always have to buy stocks just blindly. We need visual confirmation that we are buying at a slight discount, especially when you get this uniform action. Oh, that's so important. Okay? But now that you're in the stock at 9:15, again, don't overthink this. Why overthink this? If the stock is going to do well, then all you have to do is take a position in a logical place and then set a stop. If it works out, great. If it doesn't work out, you know what? You presented yourself for the opportunity and you got stopped out. If the stock moves a little bit, you can move your stop from 3% down to maybe 1% down now that the stock has gained a little bit from your purchase point. The more it moves higher, you can move your stop now to where your purchase price was, which is in this example 9:15. So you are in the stock with a stop to protect you, no loss, and if it moves in your favor, you make money. So there you have it. You manage your downside risk, but you present yourself available for any upside opportunity. Any. Now, I would like to address one simple question you asked in an email. Is, wouldn't it be better to have bought this breakout here early on? Or maybe this breakout, which was messy, and here's an example of one that failed. So breakouts do fail. This tried to break out here and failed. Hope you can see that. So there's a failure there. And once it fails, you need to get out. Like here, we have a buy point at 9:30. If it doesn't break out and hold above 9:30, then the reason why you bought the stock is not there, and you can even sell before you take a loss. If it's not breaking out, heck, why own it? And so the question is, yeah, it would be nice. I mean, hell yeah, it would be nice to buy it here, or here, or here, or here, or here. But more often than not, before this stock hits your radar screen, you're going to have missed part of the move. Because keep in mind, one of the reasons why we start looking at stocks is because they move and they become, they show up on our scanning list, they show up on the top gainers list, and now we can start following them. So I get all that. For example, this is a very big move for this stock from 150 all the way to about 270. So even by the time you get this breakout here, which also happens to be a breakout above 69.10 here, the stock has already more than doubled. Alright, so before this breakout here, the stock had already doubled, more than doubled, from 150 lows all the way to this period here, and it settled down for a couple of weeks before this breakout there. So there was a consolidation period. So you'd say, wouldn't it be better to find stocks that are in this position before buying them here? Of course, yes. But as the nature of the market goes, you're going to miss out on a lot of the initial moves, because it's the initial move that brings the stock into the consciousness of traders. Hope that makes sense. I guarantee you the stock was not hitting a lot of raiders during this drop. It's only when it starts moving, and I can also guarantee you that during this weekly move, it probably was on the top gaining list of percentage gainers for the day or for the week. And once it comes into the consciousness of those looking for momentum stocks, then you can start following it. We can all start following the stock, and we try and figure out where the buy points are. And there are many ways to time all these moves. You can time this on a daily chart. Okay? All you need is 2 days of rest in between a high, and you can buy the stock on the 4th day. So 2 days of rest would have helped you time this entry during this move here. Don't believe me? All right, let's go back and take a look at the hourly. Okay, so this is the hour. This is the same period we are talking about here. There. You can see the move I'm talking about is this period here. It rested for a couple of days and then breaks out to new daily closing highs. There's a period here where you have at least 2 days of rest there, which is this entry. There's another period here where it had a couple of days of rest there, in another breakout. So yes, you can time all these things. And again, there was a period here on hindsight. Remember, we are trying to use the chart's own history to give us some relative points of understanding why we trade the way we trade. So there's a lot of consolidation on the daily and breakout. So even though on the weekly chart it looks like it was straight to the upside on this consecutive up weeks, on the daily there's a lot of consolidation and then breakout. Okay, so even within this very steep slope, there is a lot of rest period for a couple of days and then the move higher. Okay, so back to the monthly. Yes, you'd love to have owned this breakout, but if you miss that breakout, does that mean you forget the stock? No, you follow it. You find a reason to own it. And if you miss this breakout also, finally there was a breakout here above this monthly resistance level. There was a nice entry there finally. If you miss that, do you give up on the name? No, you do what we are doing right now, which is set an alert to buy the stock at 9:30. If it can move above that 9:30 level, the better. Okay, if it doesn't, okay. You can also go back to the weekly, what we talked about on the weekly beginning part of this video. There's support here, support here. Why is that significant? Because that support comes from the ideal entry level, again from this. This is where the RSI jumped and the price started moving, and we know that we draw a simple straight line. So you can use all these methods to again time the same stock when it is under distress here, which was this support. So you can use the breakout method, you can use the support method. Okay, and lastly, go to your minute and hourly charts and figure out where you can get into a stock. Think about it. How can this not be effective if we took this 5-minute chart? We know that was the entry for today's move. Draw a simple straight line. The RSI, or the sentiment, or the demand indicator, which is the RSI, has come back to this critical level. Even on a 5-minute chart, since then the stock has moved from about 9:15, 9:10 all the way to 9:25. So The principle works. There's no question about that. It works. So you can incorporate that intraday timing for every purchase you make, is my point. There's no need in just buying or selling stocks. Why don't you take the time, be patient, and let the stock come to you in a visually place on the chart where there is support, like here. Take a position, place a stop, ask questions later. Eric Muade. Good luck, peace, and blessings. Mwah. I am out.